Good evening. It's great to see so many people, because I was a little bit wondering, because last time we have talked about cryptocurrencies, and I have decided now, since Christmas and January, last year was the year of the cryptocurrencies, and this year is the year of artificial intelligence. So the first event is about artificial intelligence, and I think personally that the artificial intelligence, the influence on the banking, will be much severer than the influence of cryptocurrencies or blockchain in the short run. So I'm very proud that we have such a great speaker line. We first have Andreas and Stephen from Cognizant. They will give you an introduction about artificial intelligence and their definitions, potentials, and also limitations in banking. Then these introductions are always very nice, but then always is the same question: what's in for me? What can I do with artificial intelligence concrete? For this reason, Nikolai will then present you the integration of artificial intelligence solutions in IT infrastructure of banks. And he's coming from Finnova, one of the leading core ledger systems providers in Switzerland. And the last speaker is Pranay. Pranay is from Enterprise Bot. It's a startup company which was founded in London, then at the F10 incubator of sich in Zurich in this program. And they have now founded also a company in Switzerland, of course here in Zug. And, and he will present the bot solution. They have also made a minimal viable product with sich, a prototype, and he will present the bot solution, the chatbot solution, which they are offering. And then we have, as usual, an apéro. It's always very thankful to our sponsors, which make all these things possible, but they not only give us money, which is also very, very helpful, of course, because our the research is financed by the industry, which leads that we are try to make relevant research for the industry. But they not only give us money, they give us also with the partners knowledge and help us to improve the agenda and to make the focus on the right things. Thank you very much. What is our next event? Our next event is the FinTech Conference. This is our main event every year at the end of February. We also publish then our new FinTech study, where we will give overview over the FinTech ecosystem 2017 of Switzerland. And I can say some news about it. 2017 was a record year. We have more FinTech companies, higher venture capital volumes. It was really a great year for the FinTech ecosystem in Switzerland. So, but you are here because we have such great speakers here. And please, Andreas and Stephen, the stage is yours.
So, also from my side, good evening, ladies and gentlemen. It's a pleasure to be here. As said, we talk about artificial intelligence in general, about definition, potential, and limitation. So who are we? Short introduction, I'm Andreas Griesser. I'm from Cognizant, and I'm responsible for all activities around IoT and connected products in Switzerland. My colleague Stephen Varey is about 1 year at Cognizant and is about to build up a practice in artificial intelligence. So, if you've not yet heard about Cognizant, who are we? Cognizant is one of the top IT consultancies in the world. We have approximately 260,000 employees, whereas approximately 1,000 here in Switzerland. And although the company is quite young, 24 years now, We've been 8 times in a row in the Fortune's Most Admired Companies, and we're quite proud of that. So what's the first thing that comes to your mind when you think about AI? When I talk to people about artificial intelligence or machine learning, I often have the impression that sometimes they are afraid of these smart machines, self-thinking instruments and systems will potentially replace their jobs. Although that might be the case in some areas, we think that AI will more augment, enhance, and support rather than fully automate and or replace our human activities. I give you 3 short examples where AI can bring added value. The first one can be found in the road traffic. We're not talking about autonomous and self-driving cars, but we're talking about AI systems who support and assist the driver by early detecting dangerous situations and as such prevent accidents. The second can be found in the area of precision farming, where you use satellite images and an AI system on top of that to correctly classify crops and diagnose crop diseases. And the third example refers to global risk event detection. So imagine you're managing a client's portfolio, then you definitely want to be the first to appropriately react in case of a natural disaster, where you know from the past that this may most likely have an influence on your portfolio. So what do? You always start with data. Big data is the term here. You collect and analyze data. You use data from newspapers. You use data from the history, from the past. And feed the next level. That means you apply a prediction and a model in order to decide what to do. And of course, the third step, the logical step, is the execution. In that case, you might trigger an automated trading robot and hence change the hedging strategy in real time. So we think as AI being a collective intelligence with all the different areas being incorporated, starting from big data over data science intelligence, predictive modeling, and the execution in that case would be a robot. And last but not least, it's always about involving your customer along that journey by, for instance, applying real-time information or dashboards.
Okay, thank you, Andreas. Just to add a tiny bit more to what Andreas said, when you hear what I have to say tonight, you just have an idea where I'm coming from. So I started working artificial intelligence in 1985, so I've been looking at this for more than 30 years. And what's slightly also relevant is that outside of my interest in work in AI, I've had a passion in trading systems and technical analysis. So, you know, I've spent more than 20 years looking at time series data and building trading systems and algorithmic black box trading systems. But my role in Cognizant is to help build the practice, firstly in Switzerland and obviously moving out into Europe. So what I'm going to say is applicable and relevant to any industry. Now, I'm aware we're mainly from finance here, so I'd also like to say in my early days I was working in aerospace and defence, but for the last 20 years I've been working mainly for hedge funds and investment banking, building trading platforms. But one thing which deeply concerns me at the moment is what the media is presenting to everybody out there. I mean, I wanted to put this slide up, and I could talk about this for 10 or 15 minutes, but I'm just only talk for 1 minute. So these are some of the key points in the history of AI, which really began in 1950 with Alan Turing. But the most significant point on this slide is the event in 1956 when 12 of the leading researchers in AI got together for 12 weeks during the summer and it was basically a brainstorming session, and they wanted to define what AI was and what research projects would be interesting to follow. And two significant things happened very quickly after that. The Dendril project was the first expert system, so it was a system for medical diagnosis, and the other was the Lisp programming language, which just about everybody in AI used to build systems for 30 years. So if you're interested, the most important name on there is Marvin Minsky, who died about 2 or 3 years ago. But if you really want to know what AI is all about, then you need to you know, Google and see what this man has to say. Okay, so that was the goal of the brainstorming session. So that they wanted to define what and this was when the term AI was actually coined. So they believed it was possible to build software models to simulate how how humans solve problems. I'm not going to spend I'm not really going to spend any time on this, because you can have these slides if you want them. So I could speak for 20 minutes about 50 different use cases in banking. I mean, where we are today is that all the leading banks, and you can see a few names there: JP Morgan, Wells Fargo, PayPal. Everybody's doing something using AI. Okay, and again, this is just a very quick slide. This is, if you like, a prototypical functional architecture for an AI-enabled bank. So from front office, middle office, and back office, AI can be used in all these different areas. Okay, so I've kind of already hinted at that. What is intelligence? So this is where I'm going to start talking about the difference between machine learning and artificial intelligence. Now, I've got 3 or 4 different definitions of AI, but probably the most basic one is machine learning just works with data, whereas AI works with knowledge. And when you see in the media cognitive intelligence or cognitive computing, and then you start looking into the details, it's actually just machine learning. It's not real AI. So I would say AI is a whole suite of paradigms for solving problems in different ways, in the way that humans solve problems, bringing different problem-solving methods to solve a problem. So, some examples might be rule-based systems, case-based systems, truth maintenance systems, reinforced learning. That I could probably quote about 30 if I tried hard. But one of the things that one of the pitfalls of machine learning is that it can be very good at giving you a good answer. So with image recognition, you can get close to about 95%, and in many areas of predictive maintenance, you can get very high accuracy. But the problem is, when you're just working with data, you're looking at historical data and trying to predict the future, but you can't explain why something happens. So if you have a fault in a wind turbine, for example, you just looking at historical data, you might be able to predict when you need to do maintenance. But as I'll show you in this next slide. So I'm guessing many of you might have heard the term black swan, which is it's a name describing unforeseen events. So there's like 9/11 or the Titanic. So again, this is something that machine learning can't do. It can't predict. It can't predict anything that that hasn't happened in the past. And this is, as I'll show you at the end of the slide, this is going to be so important when it comes to GDPR. Some new European regulations coming into force next year. Okay, so I'm just going to tell you a short story, which is highlighting what the problem of machine learning and data science. So there was a hedge fund in the US that started about 20 years ago called Long-Term Capital Management, and they had, working for this company, they had 2 Nobel Prize winners who came up with this formula. This is called the Black-Scholes model. It's to price options, and they were making a lot of money, and it was all their trading was based on this mathematical model. And then what happened? I can't remember the year. It was in late 80s, I think. The Russian government defaulted on government bonds, and in 6 weeks they lost $4 billion, and they went bankrupt, and they almost brought down the US banking industry. So my idea or thought on that is, if they'd had, let's say, a rule-based expert system that was looking at market sentiment, political stability, economic conditions, you know, just with maybe 10 or 20 simple rules, they could have prevented this. So this is something that I'm actively working on at the moment. I'm thinking about and practically how to build hybrid systems where you have machine learning working on data, which takes you so far, and then capturing human expertise and building knowledge-based systems which can take you further. And possibly it could have prevented something like this. Just another really quick example. So this is not banking, but this is how a lot of machine learning works. So when you're trying to build a classification system, what you do is scan millions of images. And in this example, I'm just trying to identify different types of yachts. So to solve this problem using machine learning, you have to work with a lot of data. And in this example, you could be quite successful. But, you know, I'm sorry, oh, it's okay. So the other alternative is you could sit down with a human expert, spend 1 or 2 days with him and capture his expertise or heuristics in a rule-based system like this. And you've got a very simple classification system. So, you know, I do think there are so many companies trying to do with machine learning and data what you can't do without the involvement of human input. Okay, I think I've already said that. So I've just got one slide on the pitfalls here, but you know, machine learning can't explain why the system arrives at a certain recommendation, and this is going to be a problem next year because, as I mentioned, this new EU regulation called GDPR, it will become a legal requirement that any analytic, machine learning or AI program will have, when it's making a recommendation, will have to explain or justify its reasoning. So I've not heard anyone else say this, but personally I think this is going to be a problem 100 times bigger than Y2K. I don't need to read that text. So we're not. I don't think we're at this stage here today, but I think in the next 5 years that we'll start seeing hybrid systems combining machine learning with knowledge-based systems. And that really, I drew this slide yesterday, so I'm trying to summarize everything I've said in the last 5 minutes. So you have a whole wealth of data from different sources, which you can broadly categorize as voice, text, image, or IoT sensor data coming into what's called a data lake. So it's, you know, a huge repository of all real-time data, and then machine learning programs work on this data, and the output of that is they give you some insight into the data, and normally it's kind of a predictive recommendation. And then on the right-hand side, you have knowledge, which you would extract from human experts through interviews, heuristics, manuals, procedures. And I don't like the term knowledge lake, but you know, in a similar way, you have a repository of data. For a really intelligent system, you need a repository for knowledge, and the case base, which is a subset of that, or an example of that, is one example where I can see so many uses and applications in banking, but it's applicable anywhere. So what a case base is it's a collection of solved problems that, and if you think of a lawyer who gets a new case, what does he do? He goes into his library and tries to find the closest matching case, and then makes small adjustments and then proceeds on that basis. So case-based reasoning is also known as reasoning by analogy. And this is just my personal point of view, that reasoning by analogy is really the essence of knowledge-based systems and how humans think. It's not, again, it's not this is just my thought, but I don't think humans think like neural nets. We reason, when you think about it, most of your thinking during the day is just looking at a situation and then compare it to a similar situation and then making adjustments and taking a course of action. Okay, so this is another way of saying what an AI system is as opposed to a machine learning system. So these are the minimum requirements for an AI system. You have to have a knowledge base and a means of representing that knowledge, and a suite of paradigms which you can collectively call an inference engine that work on this knowledge. So whereas data can give you insights, knowledge can give you explanation. That's really important. The explanation-based AI is a fairly new research topic, started about 4 years ago. But again, this is so relevant to GDPR. The need for AI or machine learning systems to explain their behavior. So there's a new skill that is going to be needed. So with machine learning, you need a data scientist, someone who's used to looking at lots of different data sets and choosing the appropriate machine learning algorithm. But a knowledge engineer is someone who can sit down with experts in different fields in a company and capture that knowledge and find an appropriate representation scheme or model so that's useful. So this is not a branch of AI, but it is an area of IT called knowledge management, and the goal of this activity is to kind of enhance business processes. So this is where I can, especially in banking, where I see the use of case-based systems could be so relevant and useful. So, you know, when you have policies and procedures and compliance, or even going beyond that, I'll just tell you very quickly one project. It was only a prototype proof of concept I worked on, but I did some work for a financial company that sold structured products, so it was a sell side. And there was one team, the structured team, that every day tried to come up with a new trade idea, which they would give to their sales team, and then the sales team would obviously go and try and sell the idea to their clients. So what I was trying to do was to sit down with the people in the structuring team and say, why are you making this recommendation today? Are you looking at interest rates or what the Fed's saying, or what? And it was hard because he didn't really know. So I had to push him really hard to get him to explain his reasoning process, and that's the knowledge I was trying to capture from him. And on the sales side, what I was interested in doing is trying to capture information from the history or behavior of the clients. So if the clients accepted the company's recommendation, why did they accept it? And is it likely they'd accept it again in the future? And if they didn't accept it, why didn't they accept it? So, you know, the part of knowledge acquisition or knowledge engineering is trying to get people to explain why they do things and what their heuristics are for making decisions. Okay, so this is really just a snapshot of where technology is at the moment. So that, I would say, as of today, we're on the fourth green bar, prescriptive analytics. So I think over 95% of what the media and all the marketing from various companies are telling you is AI. It's not AI, it's machine learning. But where we are heading in the next 5 or 10 years is onto the very top, you know, where we're introducing knowledge-based systems to enhance machine learning. That's GDPR, which I've mentioned. I'm not going to go into detail here because you can get the slides from me, but this is from a report. I've given the URL there, but there were 12 key bullet points, but I've picked out what I thought were the most important 3, and that, you know, as most of you are in banking, these are the people you're seriously, if you haven't already got them, you're seriously going to need to start hiring, because as you saw from the slide earlier on, all the leading banks are already doing AI, you know, across the whole straight through processing workflow from front to back office, and if you don't have these people now, you're going to get left behind. And the very last slide, this is the interesting thing from this slide is that, I mean, this is just relevant for hedge funds, but, you know, they're always trying to increase their return on investment, and increasingly they're going beyond traditional methods, which are the first 4 there, and they're starting to look at big data and, you know, social media, and the use of this data source, as you can see in the slide, is over 50% now. Okay, so just in summary, I mean, it doesn't matter if you're in banking or any other industry or business. AI is really just a whole collection of paradigms or different ways to solve problems, which work on knowledge, which can come from human experts or, as I indicated, manuals or procedures. So you just need to be careful when you listen to read the news or read reports, that there's a real distinction between machine learning and AI. So that's everything. Thank you. Well, I would say that I mean, 2 common ways, and what one is through the use of rule-based systems. I mean, that's just trying to capture heuristics in a simple if-then-else format. Another way that's gaining increasing popularity is through the use of what's called knowledge graphs. So it's using a graph database to capture all events that are happening in your universe, and then trying to find interesting links. And one big area which where knowledge graphs are being used at the moment is fraud detection. So, I mean, without naming a client, we had a banking client in London who came to us and said, we've been using traditional machine learning techniques and we're not happy with them. They're not giving us sufficient accuracy. So that now they're looking to kind of more AI-based approaches like the use of knowledge graphs. How you can validate that, that's a hard question. I mean, you know, I don't know what your area of expertise is, but you know, I could sit down, I could spend a week with you and capture a lot of what you know, but I can't validate what you're telling me is true, which is interesting because there's another one AI paradigm is called assumption-based truth maintenance systems, and this is very relevant to GDPR because with a truth maintenance system, whenever you make an assertion about the world, so let's say you have the state of the world is here, and you make some induction or deduction and say this is the new state, you have to give a justification. Okay, it doesn't mean it has to be true. You don't have to verify that it's true. It's just an assumption, and you keep on reasoning like this. And if any of your initial assumptions change, then you start a new branch and going down there. So this is what I think could be a very useful technical solution to this GDPR problem.
Hello, good evening. Welcome from my side. My name is Nikolai Tsenov. I'm Product Manager, Compliance and Data Analytics at Finnova. Thomas already told a few words about Finnova. Yeah, great pleasure being here and an honor in front of you presenting what we have done. Just share some thoughts with you and some ideas. Before we start, I was just thinking how shall I do the introduction, and you know, instead of telling you how important data is and how big it is and that data is the oil of this century, I just decided to tell you a short story about what our professor at the university as a farewell told us the last day. It was actually a professor from behavioral finance, and actually it was a question. He asked us, dear colleagues, do you know what is common between pathologists and economists? And yeah, we couldn't answer it, and he just answered this question, and I remember it for until now. It's almost 20 years now. So he said, look, we economists, we can explain everything. We can explain what happened, why it happened, how. We can even do some explanations of what's next. But unfortunately, too late. The patient has died. So he said, be smart economists and not pathologists. And this sentence kind of influenced my career. So I wear it with me, and I think in the context of the topic today, it's very important to be a smart economist, to do smart banking, and I hope that today I will show you some ideas how this can be done. First of all, starting with the challenges and pitfalls, which I selected to speak about today, much more than just 7, as you will see. Then I will try to explain you how we tackle them, how we try to structure the processes, to use what we have at our disposal, data, algorithms, etc., in order to solve these issues. And as our motto is "Seeing is believing," I will also show you our system live. Okay, let's start with the challenges. I was just thinking which challenges shall I choose? There's so many dimensions. And then finally I decided for 2 of them. And putting them on this scale, they vary between technological challenges and psychological challenges. We have financial challenges, we have political decisions, irrational decisions, but I just chosen these 2. And within this range, I have positioned 7 topics I will talk today about. Of course, there are overlappings, and I will try in my second part of the presentation to refer to each of those points. So let's start with handling complexity. I'm speaking about technological complexity. We live in a complex world, and we have different use cases, different problems to solve, where different data can be used. We shall use different algorithms. We have to combine them. We have to understand them. And what people or human beings do actually when they face difficult or complex situation, we simplify them. We tend to reduce complexity. We maybe trivialize complexity. In the worst case, we ignore complexity. But maybe instead of reducing or ignoring complexity, we should reduce the complexity of handling complexity. And this is what our suggestion is. Related directly with this one, the lack of automation is a big challenge for banks and for institutions in general willing to do artificial intelligence. Just imagine starting importing data, processing data, transforming it, pre-processing, analyzing, developing models, optimizing models, validating them, calibrating, optimizing, analyzing results without automation. It's just not possible. And this is where institutions come to their limits, and not every institution can have a team of nuclear scientists and PhD holders to work with this. So it's a very essential point to think about. Third one, again related to this concept, is lack of transparency, black box. You just said quite nicely how GDPR will affect this. But I think that especially in this field, as soon as you hear the word black box, you have a resistance, you have suddenly a, not because of compliance, not because of GDPR. People want to understand, to see how these decisions are made, what's behind it, how the tree explains this pattern. So transparency kind of will, on one hand, we have the desire to decrease complexity. At the same time, we want to increase transparency. This is kind of a contradiction, but I will try to show you how this is possible, how we can find a middle way of handling these issues. Performance measurement, central item, very important. Whoever tells you my algorithm is the best one, is the most precise, show me. Just give me evidences. That's why we decided to choose as a motto, seeing is believing. Until you show me how it performs, until you show me before and after, you can tell me whatever you want. But the problem is, can people you discuss these issues with, can they understand how performance is measured? Do they know what area under the ROC curve is, or Gini coefficient, or Kolmogorov-Smirnov statistics, or accumulative accuracy profiles? Probably not all of them. So, or how will you deal with questions if you kind of have to make a decision when you are faced with a trade-off alpha-beta ratio? How will this influence your performance, your accuracy of the model, your stability? Or another trade-off, accuracy, stability. If you have a currency shock, what would you prefer? A stable model or more accurate? And how will this influence your performance? A lot of issues which you have to address and find answers to this. Related to this, wrong expectations. When we speak with people, we still see that they expect this to be a crystal ball or the magic stick of Harry Potter. It's not. The whole concept of probabilistic analysis has to be explained, people have to understand. And I can just give you some examples here. The first, I call it the phenomenon of floating piece of wood. imagine a situation, a castaway person swimming, you have several miles to reach the shore, water full of sharks, and suddenly you see a piece of wood where it stands. If you take this piece of wood, your probability to reach the shore will increase by 75.4%. But then what we monitor, how people react is, nope, unless it says 100, I will not take it. Another example, typical for models applied in models which are not compliance driven but profit related, like analytical CRM, cross and upselling, for example. Usual saying is, I will invest 10,000, but if this will not bring me 15 back, I'm not interested. So we have to explain what reduction of false positive is, even if you don't increase the true positives. So reduction of time when you process a long list of false alerts, for example. And the third example here is when we speak about unsupervised learning and monitoring of patterns which we don't know, the black swans. People ask, okay, can you guarantee that I will detect this? I don't know. And whether this will happen tomorrow or in 2 years, nobody can. But this is kind of a safety net, a kind of a second line of defense which has to be there, especially in the fraud detection, because this criminal power is so inventive. They are always one step ahead. So these were the three examples for wrong expectations. And going further to psychological challenges, I think my favorite one, silo thinking. I love it. We have silos within silos. Every single team thinks they are unique, they are absolutely isolated, they have their own agenda, their own budgets. It's difficult to speak with these people because a treasurer thinks all the other guys don't have a clue. I'm the most important one. The same probably as the risk managers or the sales guys on the front. So this is really, really a difficult issue, and this offers a lot of fertile soil for niche players who just offer something here and something there, offering a small solution because people live in their silos and don't want to see the big picture. And the last one, which I will not speak that much about for me, which I face quite frequently, is the VC and marketing trap. I will just say one sentence here is that when you handle the first 6 properly, your probability that you will fall in this trap is reduced significantly. Okay, so here they are. What do we do with them? So we are human, we make decisions, we make wrong decisions, we make decisions in a team, in an organization. So what happens at the end of the day is that our organization as a unit produces a biased picture of the reality. It has an influence on our perception what artificial intelligence is. It has an influence on our expectations, what this can do for us. It has an influence on our readiness, willingness, and openness to do something here. And that has a direct influence on the execution of our strategy and then the success or not. So this is how I see it. Other dimensions, I agree, but I will focus today mainly on the first 6. Good. When we started with developing our framework, the main question was, Finnova is a core banking producer. We are predestinated to work with all the data we have access to. The system has to offer and solve all analytical challenges a modern bank faces. It has to offer everything from front to back. It has to work real-time, near-time, end of day. It has to be transparent. It has to offer something more than just algorithms written in R or Python. It has to be accurate and stable. A lot of requirements, and I think we managed to solve many of those questions successfully. We build a system which is front to back, which works real-time, near-time, end of day, and can handle all analytical issues of a bank. And here I must say clearly, Our world is structured data. So we don't process images, videos, sound recognition. This is not our world. We have experience in unstructured data like text, messages, financial messages, or corporate actions, for example. Or even, you know, on the market there are a lot of solutions which transform unstructured data into structured. So this is our world. This is what we handle. We handle it good. And this is where we swim for the time being. So what you will see today is related to this kind of data. This system is fully automated, starting from data extraction, pre-processing, transformation, model development, and regular optimization and calibration of models. Absolutely automated. As we are not building on our algorithms, which are available to everyone, we are building on a proprietary developed algorithms based on evolutionary learning and some secret sauce optimization procedures. We have achieved great performance and stability. This, of course, helps us to make faster and smarter decisions. Very important is that as we cover front to back many areas, we create a lot of synergies. You will see some examples so that with one single solution, the same infrastructure, same data, same processes, same people, we can solve many questions and problems. And of course, as we solve not only compliance tasks, but also profit-oriented, we try to reduce the regulatory burden. So even in the best case, it's not always possible, but sometimes we can even overcompensate it and produce the so desired negative net regulatory burden. Sounds very complex, but if you want to read more, I've written an article in LinkedIn, so you can read about it. So this is it, and I promise this will be the slide with the text for the next minutes. When we were starting, we put a question: how deep shall we dig until we find this common denominator? And what is it? And we just understood that this is data and algorithms which need to be used depending on the situation. So the three sources of data we use are all the data internally generated within core banking system or other surrounding systems within the bank. We use external data, financial data, blacklist, etc. And very important, internal know-how. You just explained it, how important the knowledge which you have in the book. Because of experience, because of predefined procedures and policies we need to follow. But it's very important to let people work on it, so that it's transparent, so that we solve the issue of the black box. So this data goes into the framework, and we can solve many, and we can answer a lot of questions with these three types of data. These are the three components. What we offer, of course, we build models on historical data. We train the models. Most important thing, we fully automatically calibrate them every day or intraday as soon as new data arrives. We do unsupervised modeling for searching for black swans, for unknown patterns, and combine this with expert knowledge. So maybe this answers somehow your question, how we do it. We do let people create their own decision trees here with the rule designer, but in the past, this is what existed. This is what was available. People were just using static trees, nothing more than this. Now, our experts have the possibility even to add some intermediary results from these two parts into their static trees, so that, in fact, we have a semi-static or semi-dynamic trees in addition to models which were created fully automatically. This is the cycle, traditional cycle. So we have three places where we create the models first. We build them, we calibrate them, optimize them. We store them on a library, and then we execute them. Execution from real time, as I said, to end of day, as you wish. The frequency is up to you. and the feedback flow for learning. This model here plays a very important role. It's kind of an orchestration of the whole process, and takes care that the other two parts know when, what to do. This is a very high-level architecture of the first part, where we build the models and calibrate them using these three areas. After transforming the data, we build profiles, a time series of profiles. This data feeds our three areas. At the end of the day, an aggregated model is built, and all which is the orange part, this is the secret sauce, the optimization algorithm, which reaches these excellent performances. Next is an example of executing a model for fraud detection. You see here again three components. We start with name checking of customer data and transaction data, online and batch. Already here we use some algorithms like pattern matching and phonetic coding algorithms. We use hybrid approaches here, and second, we apply behavioral analysis using searching for known patterns or new patterns. We let the experts create their own rules in addition, static rules or semi-static rules. And then we also offer the link analysis, which is a very nice feature. For those of you who have to do with compliance here will know what GMER and TMER is and how this has to be visualized. This helps a lot, and I brought some examples with me tonight. So at the end of the day, you get all the results on the dashboard, where we distribute action plans and monitor tasks and see how people work on them. And basically, every institution can configure its own procedure, how they want to deal with it. So it's actually a nice place where we can actively track the information and see how it's solved. This was an example of fraud detection. And what we did first, actually, we have connected to our payment stream. The first model was the name checking. Payment stream and customer data. These are the two sources which are absolutely enough to solve a lot of issues, not only anti-money laundering and fraud detection. With the same data, with the same infrastructure, with the same tool, applying some additional models in the engine, we can do the behavioral analysis, pattern cognition and recognition, dynamic link analysis, etc., etc. But the beauty of this concept is that exactly the same tool, the same data, the same infrastructure, the same interfaces, the same processes are used for many, many other question marks within the bank. Credit risk, rating scoring, analytical CRM, internal and external business intelligence, risk management, up to analysis and financial data. Many of you would know the KYC abbreviation, so know your customer. And unfortunately, this is limits just to a simple name checking against the list. So is that really what justifies to say that you know your customer? My answer is not. It's not. And that's why we have introduced the concept of understand your customer. And since we use absolutely the same data, like customer data and transactions, at least these two other parts belong to the same concept. Because you probably would agree with me that you will not provide to a customer a loan if you know that he has some troubles here, and actually your cross and upselling model tells you that he needs something else. And the other way around, you probably will not sell him Dritte Säule contract if you know that he needs something else, if you know that he is not good on his credit history and is involved in some activities. So these three just naturally belong together. But what we face when we speak with banks, that within this silo, they have different silos, which are addressed by niche providers, so that the bank has a system for name checking, they have a system for anti-money laundering, they have a separate system for transaction monitoring, for credit risk, etc. Instead of handling this in a unified and consistent way, we have silos. I will go one step further. Speaking with our customers, we see quite often that in fraud detection, we have the situation where internal staff is involved in these fraud patterns. So that's why we decided to add also analysis of internal business intelligence models on top of our fraud detection. Another example, MiFID. MiFID speaks about 4 scenarios. Oh, the 4th scenario is there. How can we solve it? Well, how about 44 scenarios? And how about analyzing financial data, making forecasts, so that when your customer is there, you say, dear Mr. Meyer, we expect that within the next 4 weeks, the markets will go down. So we advise you to underweight your US exposure and Southeast Asia. Just because you want to achieve better performance, not just because you have to be compliant and to achieve the checkbox. So you see, the mindset is different. If we think that how can we use the same technology, not just to be compliant, but to create profit, to make our customers satisfied and just be more profitable. And just to make the round complete, IFRS 9, or the so-called current expected credit loss calculations, need to be done on regular basis, not just a point-in-time calculation. So here we are, with the same tool, with the same infrastructure, with the same data. So I've mentioned all these advantages already. And yeah, I think PowerPoint is enough now. Let's switch to real life. So what I will show you tonight is the engine. This part where we build the models. So what I will start is actually the last layer of optimization. Then we will switch quickly, or I will show you the model repository. Please excuse me for the resolution. We couldn't manage to make it better, so it's not really, but if you are particularly interested in something, we can show it to you later on. And then I will show you some examples on the front, how it looks like, how the user works with it. Not the nuclear physician and not the PIG holder, but the regular user. Okay. What you see now, this is our engine. This is a simple project with just a few attributes, I think not more than 30. And what I will do now is I will just, by the way, what you see now is completely, fully automated in the background usually. I will start some processes manually now, but they run automatically. So I will start now a model building process, actually. So what is done now? Data is loaded, transformed, pre-processed, cleansed, reconciled. We have about 80 procedures to handle data before we start the modeling. And then at the end, which started now, is the optimization model, this orange part, which will take care that the engine chooses the best combination of these parameters. And optimization consists of using the lowest possible number of attributes which could achieve the highest possible accuracy. So even if you put 200 parameters inside the trichter, I'm missing the word, the word, funnel, thank you. You will receive a formula at the end of the day, a model structure which will tell you these 7 are relevant today, tonight, with these weights. So they will be taken over into the repository, to the library, and used by the execution of the model. It doesn't mean that tomorrow some of the other parameters will not pop up as an important one, or the weights of the defined today will change. That's why we feed the system always with everything we have and let the system decide. I will stop this process now. So basically the target is to achieve the lowest possible error score, which guarantees that a certain combination of some of these factors has provides me the accurate possible model. So what you see now runs usually overnight, so that when you come to work in the morning, you see an updated model, which is ideally directly transformed into the production system. Eventually, if you have 2 additional parameters which suddenly pop up as important, and we had such cases in the past, then of course the user has to research, has to understand why, until it's until it's authorized, the model from yesterday will be used. So now I've stopped the process, and what will be calculated are all the quality parameters of accuracy and stability. Very nice feature here is that you can compare before and after. Even before optimization, we import existing models, and I've experienced that we had models which had a cumulative accuracy profile below this line, which means below 50%. And this was an example of a expert, actually, who was overloading the model with factors, thinking that he does something useful. At the end of the day, if he would throw a coin, the decision-making would be better. So here we have all the parameters which we need to monitor. I will not go into details right now. What happens next? This model is then stored on the library. Sorry for this, I cannot increase the resolution. So what you see here are all models for all topics. This is just fraud detection, and we have hundreds of models here. Some of them are created fully automatically by the engine, by the 2 processes, supervised and unsupervised learning. And some of them are a result of a rule designer, where users create their own rules, maybe using some interim results, meaning that these trees are semi-dynamic. We have a versioning of this. The full lifecycle manager for the model is there. It happens there. We see when it was changed, why, what was the reason, what was changed, which factors, etc. So, for example, here in online banking, checking IP addresses against the dynamic blacklist, we had several versions of the model. Currently, we are using 1.1. 1.2 is prepared to be used, and this is rejected, and so on and so forth. If I, for example, want to build my own models, I use our rule designer, where different logics, so I can easily create my own tree within minutes and activate it so that it's used when the next model execution starts. Okay, so this was what happens on the background. What the users will see finally is a dashboard. This is an example of fraud detection. We have alerts to work on, alerts assigned processes, etc. So here we define whether it's 4 eyes principle, whether it's 6 eyes principle. We can monitor the progress, etc. Here we also have this nice feature of link analysis, which I mentioned earlier, where we can visualize really complex structures. Like in this case, it was actually a fraud detection model, including also some tax fraud detection. Interesting figures like 2 companies where the CEO is a beneficiary owner of a offshore trust, has transactions with this company. Okay, so here we have an alert which describes all this. And by the way, we just used the Panama list. We added the Panama list to this model. Works very nice. This is another example. Which is limited using this filter, where I can say by org unit or by type of messages, or depending on your responsibilities, you can see certain fields only. And for example, here I have some know your customer and know your transaction filtering results. Some of them are closed, some of them are not. We are working on them. So we see the general data, all the data which is collected, historized, archived, fully transparent. Next example is the credit rating and scoring. With the same data, with the same tool, I do analysis, for example, for retail portfolios. We do the we do the scoring of customers. I can see the risk rates by probability of default, exposure, etc. I have the transition matrices, very important information for any further type of analysis which we can use. By the way, we produce also transition matrices for portfolio management, also combined with certain scenarios how the market will develop. Finnova is a co-banking producer for banks. We have never had a customer in other fields. And just, this is a premiere, where we loaded insurance data into the engine and processed it. So basically what you see now is exactly the same analysis of insurance fraud, where we see accidents with cars, that certain witnesses were participating in different cases, doctors involved, so very interesting pictures, absolutely with the same system. And finally, a project where I said I will show you some examples where we process also unstructured data. Here we process financial data, no personal data. We do the analysis of Dow Jones every day, just shortly before the exchange opens. The model is executed, and we receive a signal, a prediction with certain confidence, which basically tells me whether the market will go up or will go down with certain probability. We see the main characters of the processing as of today, as of now. And actually, what is interesting is that we see a lot of potential here for analytics as a service or software as a service. Basically, this runs in Switzerland and in our offices, but we in API modus serve customers in Tokyo, Sydney, all over the place, just providing 8 fields of information like the signal, confidence, so that hedge funds, trading platforms, whoever can import this information in their systems and build their own strategies. We are here to answer your question afterwards. It will be a great pleasure for you to share some ideas. We have a great team here from Finnova tonight, second row. So just approach us and it would be a pleasure for us. Thank you very much. You mean the front end?
Yeah.
The front, it could be a compliance officer, risk manager.
Can you automate it actually, that it detects something and then it works on its own?
You mean how the feedback loop happens? Yeah. How we learn? Of course, part of it we rely on the feedback of the front people. Part of them are identified by the system if default happens, for example. Or if we recognize that the Dow Jones went down and not up. Well,
Hi everyone. I'm going to talk to you about a problem that I think all of you can relate to. Just think about the last time you called up customer service. Whether it was your own bank or an airline or anything else, it was a frustrating experience. Now let's turn that around. Let's think from the bank's perspective. There are repetitive calls coming in, whether it's to your IT department or whether it's to your customer service department, that basically are basic queries that take up a lot of your customer service staff. We believe there's a smarter way to actually deal with this. What we do is we understand 60% of the repetitive questions that are coming in, and we are able to actually automate the entire process. And as people before me mentioned, it's very important to have a hybrid solution where the machine, if it's not confident above 80% or 90%, then it transfers it to a human agent to actually respond, so that you make sure that at all times your customers get the right response. So let's look at a bank. What we've seen is, from a retail banking perspective, you're getting a lot of queries about why exactly is this particular credit card fees on my bill, or why exactly was I charged last month on the 16th, or you can actually even ask predictive questions. What exactly is my cash flow expected to be by the end of this month? How exactly am I doing on my payments? And that's what basically bots and AI are actually able to offer. To be able to actually do this, we use something called natural language processing, vector analysis, and we put a lot of other variables into a concept called a neural network. Over here, for example, you heard a lot about structured and formulas. Now just think about trying to apply formula or string match or basically any kind of rules to natural language. You have simple keywords like book me a ship versus ship me a book. It's exactly the same words, but I think they have slightly a different meaning. And that's what basically AI is able to do. It's able to understand these nuances. It's able to understand what your customers really want, whether they want you to book you a ship or they just want you to ship a book. And by using this AI on the data that you have, what you're able to do is actually create an omni-channel support system that's available 24/7, that's able to speak to your customers. It doesn't matter whether it's through SMS, whether it's through email, or groundbreakingly enough, Facebook Messenger or WhatsApp. And this is not a concept that we're talking to you about that's revolutionary, that's not actually in existence. We actually are already working with customers in Switzerland. We're working with both the Swiss Stock Exchange, so 6 security services and 6 payment services. We're working with Afterpay, which is a lending company where customers can actually ask them that what exactly is the interest rate that's been charged to me, or what exactly are the payments that I need to make next month. It can actually even actively tell them that, hey, your payment is due next week. Do you want me to send you a link to actually pay that? In Afterpay, 25% of the customers today actually use the bot to engage and complete their transactions and ask any queries. It's completely live, so you can actually go to afterpay.nl and actually speak with the bot. It's in Dutch, so that's the only caveat over there. And what I really wanted to talk to you about is the thing about AI. One of the most important things that I think you might have heard is data. And what we basically have tried to do is, how exactly can we take away the problem of data from enterprises? Today, many of the enterprises, some of the cantonal banks, some of the other banks as well that we were talking to, one of the biggest problems they had was, okay, we want to automate, we want to save costs, but we don't have any data to actually give you to start AI, which is problematic for AI. So what we actually did was we understood what the requirements were, whether it's from the lending agencies in a bank or whether it was from the retail banking side. We created large corpuses on which we've basically trained our AI system so that you get something that's already pre-trained. It already understands banking ontology. It already understands what exactly people mean when they say something. And what then we do is any additional data that we get through the testing phase, we improve the accuracy. You start at an accuracy of around 70%. With a few of our case studies, for example, as I mentioned, Afterpay, we hit as high as 95%. This is something they've published as well, so you can actually have a look. Similarly, with Six, we are live on their Six payments platform, where we have about 85% accuracy. With Generali, what we've actually done is any email that's coming in, we're able to understand what exactly a user really wants and actually direct him to the right department. First, all emails that were coming to a general email ID were actually being processed by humans and transferring that. We were able to actually understand, classify, and send them to the right location, cutting down days to actually respond to customer agents and actually reduce the number of agents required to respond to your customers. And additionally, we're working with another insurance company in Switzerland, which we hope to go live in the second quarter this year, where what we're doing is we're able to actually tell you exactly what your policy means, what exactly it can do, cannot do, recommend a policy. And as people rightly pointed out before me, that it's very important whenever you build a recommendation engine that you show how exactly it works. And we've kind of mixed these two ideas of how exactly can you use AI for the large part, but how can you actually mix some of the old factors of knowledge into that AI so that you basically make sure that you're compliant, you make sure that it actually works in the system and in the environment that you are. That's just some of the testimonials from Six, Afterpay, and PwC. That's another partner that we work with. Right now, we're working in the Netherlands, in Switzerland. We're starting in Canada as well. So it's not something that's only relevant to any one place. I think AI is going to become more and more relevant. That's the team. And I don't know if there's sound, but if there is, this is a really interesting video, and I'm hoping it'll actually play. No? Let me try and see. Is there sound? I don't know if you can hear it. So I don't know if you could hear it. It was really soft. But before that accident happened, there was a beep. Even before the accident happened, the Tesla actually predicted that there will be an accident 3 seconds or 2 seconds before it happened, so that the driver was actually able to look and actually take recursive measures. The idea is AI is already here. We're not talking about the future. We're not talking about something that's 10 years from now. The only question is who exactly is going to adopt it and how exactly can your business actually utilize it to improve both revenue and costs. Thank you.
Do you think there are call centers in the future?
I think at any point, as was mentioned before as well, AI does a great job with looking at historical data, and to a certain extent it can do some analysis based on the historical data to project as well. But humans will always be required, at least for the next 10 years before we see Terminators really around us. But what I do believe is, at least for the next 10 years, the best models that you're going to see is when it's not pure AI, where it's basically humans getting knowledge from AI and actually being able to utilize that knowledge to act upon it. That's where you're going to see the most benefit, and that's the right hybrid model that we see. Sure. So over there, what we've seen is, in terms of the way you phrase the answers, plus in terms of the terms and conditions that you actually put over there, you mention very clearly that 1, you're speaking to a bot. 2, that in case you get an answer, please verify it. It's your responsibility to make sure that all the data that you're getting is correct and you're interpreting it correctly. Any answer that's given is given with context, so it's not given completely out of context, like without any kind of backstory, which means that it's as good as an FAQ page. You're as liable as your FAQ page, where you're actually giving information, and then it's the client's responsibility to be able to ingest that in the correct way and actually act upon it. Thank you very much.
Thanks again.